Hello all, I hope you are well in these weird and wonderful times. Welcome to Fintech Finance's virtual arena. Today we're going to be discussing European payment infrastructure and how it is changing in an ever more dramatic way. Joining me today, I'm pleased to announce, is TAS Group's Mario Mendia. How has lockdown been for you, Mario?
Hi Ali, all good, thank you. We've been through difficult times, but now we're recovering.
Excellent. And also joining us today is Raphael from UniCredit. Raphael, your home looks a little bit like an office. Are you back in the office?
Yes, we are back in the office slowly but gradually, and it's very good to be back in the office. To be honest, it's to see some of the teams that's here. It's very nice.
To kick things off and to get a sense of what payments were like in the before times, Mario, can you tell me about the current European payment infrastructure and how it compares to other regions in the world?
European payment infrastructure and payment technology are leading, in my opinion, the global market. With SEPA and PSD, PSD2, we have promoted a common business and security standards. We have unlocked competition in the market. Still, the European Commission is consulting these days about the European retail payment strategy for the next year. On the other end, e-commerce has been lagging behind if compared to US or other countries, and the adoption of electronic payments varies a lot from country to country. While in Italy, for example, we have a low adoption, in other countries like the Nordics, the adoption is very high. These local differences are very common still in the new initiatives. We have seen, for example, that instant payments have been starting or developing before in the local market, and then a new, let's say, European strategy has been developed. Overall, so Europe seems to have bold infrastructure and technologies, but is more traditional and fragmented, which means that there is less opportunity for scaling up initiatives and investments, and by consequence, European competitors are striving to compete with their peers globally.
Well, let's with that in mind, you mentioned a little bit around the physical side of things, especially when it comes to cash and payments. When it comes to that, there is an element, for example, my gran loves using cash. How do we ensure that people such as my gran are not left behind?
Well, this is a very difficult transformation as an offset, I have to say, because for when we are all used to do something, it's very difficult to change our habits. In that respect, we also look at we were used to meet people face to face, and suddenly we have to meet them remotely, as an example. In reality, also for your grandma and also for anyone who is using to use cash, the move to use electronic payments is, first of all, to make it easy and reliable and accessible. If it becomes complicated, then it will simply be a barrier for ramping up, I would say, this to the further extent of all the retail world. But if I take, for example, when we see some markets, they're moving from cash to non-cash, it includes usually two elements. The first one is the infrastructural change that enables to move of these small mini payments into electronic ones, and secondly, to make it very much accessible. If we look at the contactless payment side or in the mobile payment area, which is accessible for all of us as individuals. I'm not talking about the corporate side. I think this too goes hand in hand in a way also with some, I would say, regulator telling us that we need to stop use cash would eventually bring all, as much as possible, all individuals to make better use of this, I think, wonderful innovations that makes our life in general more easy.
Absolutely. Now, you've been quite passionate in the past around PSD and PSD2. In regards to Europe as a whole, and I know that Australia and such has almost copy and pasted some of that regulations. Do you think that PSD2 is a driving force behind some of these technological changes, or is it still very much the customer or the people pushing this forward?
PSD2 as a regulator enable, I think, the industry to develop towards the API connectivity of different type of services. I mean, per se, as itself, it doesn't stand for anything. However, it enables the free market to enter into areas that before were quite complicated. So these APIs are now under the development, and in this respect, of course, we are experimenting this quite a lot in the corporate world and in the retail world, how to connect using this enablement new services that before were almost even impossible to provide, for example. And I can give you several examples of a very good use cases which connect, for example, the corporate and the retail, for example, using a certain APIs within the perimeter of hosted with the same bank. If we talk about one of the utilities services provider, for example, and one of an individual provider, like myself, that I want to subscribe for this service, and then he will get a question, are you a UniCredit client? And if the answer is yes, he would be able immediately to retrieve the data about, while giving the consent, all the information from his UniCredit profile in order for him to facilitate the actual contract signing. So if you think about that, pre the PSD2 world, it was impossible to provide this service. You have to do an asynchronous, I would say, flows of data sets, which were completely cumbersome and also non-economical. So the PSD2 in that respect is an enabler for a free market to provide additional value-added services for both corporate and individuals. So we are passionate in that respect, but not because it's the title PSD2, because it allows the open banking to really develop and evolve into the maturity that provides value-added services for the entire ecosystem.
I think you've hit the nail on the head when you say about it, again, providing value for the entire ecosystem. But do you not think that it opens up the door for a lot of, let's say it, for an Uber to very easily become a bank? Is it not just an open door to say, hey, big tech, come at us?
Well, I mean, if you talk, this goes into a general philosophical question whether the fintech world is challenging to the financial industry or to any type of an industry. And of course, the answer is yes, because they thrive us to give and provide better services. On the other hand, when you look, for example, of the COVID impact, what happened in this industry, for example, you saw that, for example, many fintechs that just before the COVID crisis were up and running and very much promising, suddenly stopped to cease to provide the same services that they were giving before. So we have, I think also, at least in the corporate world, there's been a lot of, I would say, rational maturity in the last couple of months, going from the offset of someone who is having a very simple look and feel and a very applicable solution where it is very easy to use, versus the reality that you understand that some infrastructural things have to be there in order to sustain when you have such an economical hit, for example, or when there are disruptive areas, things like that nobody expected before. If we look at it from the cash management and payments world in that respect, it's true that in theory, you have today PSPs that might offer some services that before they could have not. On the other hand, they are also opening the door to provide some additional value-added services to the corporate. So yes, they put us in a way to challenge ourselves in the value-added services that we provide versus what we used to be before. That would be also, you as a bank 5 or 10 years ago, you're the only one who can provide such a service. So you are being, I would say, more laid back and said, okay, I mean, nobody can hit me in this respect to taking my fair share, I would say. This is a very stimulative thinking for the entire, I would say, managerial scheme of any industry. And I think it's also a very good point of attention for everybody to think that in this world, things changing all the time, and you cannot just stay and relax on your laurels and say that everything will be fine. You constantly have to reassess your position and your services and make sure that you are in line with what your mission is expected to be.
Excellent, thank you. Mario, what's your view when it comes to really the charge of change? Is that more down to the likes of PSD2, or is it the customer that's driving all of this?
Well, I think there are global trends for change that everybody knows. E-commerce, new integrated payment services, data management and analytics, all of these are progressing everywhere and setting up new standards in customer expectation. Nobody will stop it. Also, cybersecurity and data privacy issues seem to be the dark side of the force, but there are just consequences which we have to deal with, and we will do it. Within this framework of global trends, PSD2 has forced the industry to evolve in a more competitive ecosystem, promoting innovation with the API, as well as security standards, and pushing forward the SEPA integration, so the possibility of scaling up the investments. I share the opinion that PSD2 could have been more prescriptive in technical standards to avoid the present burden of different APIs. And also, I think that the current COVID-19 crisis, from what I'm seeing in the news, is probably accelerating some of the market dynamics towards a wider adoption of electronic payments, and PSD2 will enable a better response of the market to this crisis.
So you mentioned a little bit around the infrastructure there, and I mean, one thing that this whole pandemic has shown is that you need to be able to scale, not just up but also scale down as well on various services, and cloud has proven to be quite an invaluable, not just for people working from home but also for the ability to scale up and scale down at speed. What does the adoption of clouds mean for the payments industry, i.e. with people being able to have everything with the ability to scale up and down speed?
Well, for sure. I mean, this goes again beyond the payment side. When you talk about the cloud adoption in the real life, of course, it's the quick way to scale up infrastructural and application solutions towards any type of an industry. For the payment as well, in that respect, when you talk about, I would say, individual payments, which are small in value but high in quantity, versus the high value payments, which are completely the opposite. I think today the scalability that you're looking up would be always by using many of these services, not on the premises as they used to be before, but that cloud. Said that, we have to be also concise with the fact that our most important thing is to safeguard our clients and our bank in terms of security. So there will be no compromise and no jeopardizing by any type of mean by using this technology enablement versus the security, I would say, strict governance that we are going to continue to do, because this is the most important thing for us as a bank, is to take care of the security of our clients and of course our bank. So with this in hand, evolving in the future, yes, looking to this as a scale-up option, absolutely. We're keeping in mind that security is our top priority.
One other thing this pandemic has really shown is how important a bank is really for distributing funds, for being that network for particularly, I mean, it was this week it was announced that, I forget the figure, but it was a big amount of money is coming from the European Central Bank, going to be distributed, a lot in Spain, a lot in Italy, and the bank's kind of quite core for distributing that aid, that fund, those loans, those grants. What does that mean in terms of what it's going to put on UniCredit's infrastructure by having a quite an increase in a short period of time, that large volume of payments, both in terms of amount of payments, but also the number of payments?
Well, I mean, first of all, we are ready, as our infrastructure is absolutely catering already today a huge amount of millions of transactions every hour. In this respect, I am absolutely certain that this would not be an issue. From the funding side of how to distribute, let's say, the loan side, is where our bank prepared a big infrastructural change during the COVID first weeks, as Italy was maybe one of the most first countries that was hit quite hard and went into the lockdown. I think one of the most first ones in Europe. We were also the first one who take actions intra-Europe countries in order to make sure that we are preparing for the liquidity flow that will come to our corporates and our clients through the central banks and governments. So I would say that I am absolutely happy to see how this has been evolved, and this is actually a work in progress. I mean, it is working already for some weeks now. I mean, it's for some months actually. For now in July, that this flow is taking is taking the path very, very well.
Valid, very valid point there, Raphael. Mario, what's your take on this? Is cloud one of the big things that's really pushing the industry going forward?
Ali, let me please touch the liquidity subject before, because we offer liquidity management software to bank, and we are helping banks in dealing with ECB, TLTRO. As you know, these are managed through the Target Services, the boldest payment infrastructure in Europe. And after Target 2 T2S consolidation, a new system called European Collateral Management System will be implemented in 2023 to allow better funding for all the European banks across all the different countries. So the system will even improve. We have seen that after this, only the stable coins will be the ultimate tool to be implemented, particularly to release what they call the helicopter money policy implementation. Regarding the cloud, it is indeed a real accelerator in payments modernization, because it enables resilience, scalability, flexibility, so allows continuous improvement and market response, faster market response. But we see that there is no one cloud fits all, if you can say so. Everybody has a different approach to move to the cloud, to include the speed of execution and to keep the cost variable, which will be a priority for many banks in the next future. So we've seen, for example, that neobanks and fintechs are naturally cloud oriented. We have implemented a bank together in few months for Arab Gulf Trade Bank last year. It was extremely fascinating how fast and simple it was. On the other hand, we see that traditional banks are adopting the cloud in steps and in segmented approach, trying to differentiate by sector of business, data management and security risk, potential savings, and so on. For example, to participate recently to an RFP for an important bank, we had to guarantee the possibility to migrate after an on-premise implementation, the capability to migrate to the cloud the whole infrastructure we were releasing. Last, I think that also small banks have a particular interest in the cloud, because they can acquire package solution to deal with complex issues. We are, for example, offering to small banks the access to the target services of the Euro system with a new service called Page, where everything is provided and delivered in cloud.
Absolutely. Well, you mentioned the central bank. We can't talk about the central bank without talking about Target 2. What does that mean what does that really mean, not just for UniCredit, but yourself on the day-to-day of your role?
I mean, I call it, Target 2 is an important infrastructural change driven by ECB. I mean, we call it the XML ISO 222 journey, because it has several pillars. Target 2 is maybe the first one and most important, but also SWIFT is moving to XML. So as an offset, as an industry, you see there is a journey towards XML migration. This project is an infrastructural project that we have looked at it from two angles. First of all, the fact that it is whenever you're doing an infrastructural project, usually they are very difficult and painful to drive them through, and you're only starting to see the benefits once the infrastructure is there. On the other hand, we've taken the opportunity to review internally some of our processes and systems and to streamline already some of them by using the Target 2 opportunity. So to take that as an opportunity for us to make our operations and our infrastructural, let's say, legacies more simplified. It doesn't mean that we've done all the way through, but we've taken the opportunity with the Target 2 to make this a change. And may I also continue the fact that afterwards with the SWIFT changes to ISO 222, that means that eventually the entire financial industry, when the SWIFT the transition period will be over, will be fully XML bottom up. No? So there will be, and in this respect, this creates a lot of opportunities also in the way that you are able to foresee different type of services related to liquidity and payments. So if you take this as an offset, is a very big project. It's a very time-consuming project. The entire bank is actually working towards that migration, given that it is touching really quite a lot of infrastructural and internal application. But on the other hand, we have looked at this as an opportunity to make our life, in some cases, a little bit more easier.
Mario, in regards to Target 2, I mean, it has arguably been running smoothly for over a decade. What is changing recently?
The Eurosystem is creating since now 4 or 5 years a new platform integrated of target services, which includes T2S for the security settlement, tips for the instant payments, and will include also the European collateral management system in the future, like we said before. In this context, the Target 2 real-time gross settlement is migrating to this new platform to secure a full integration with the other services, guarantee extended business hours, and improve liquidity management and monetary operation of the central bank. Also, security and cyber resilience are in the focus of the initiatives, and one of the main points is that all the platform is based on ISO 20022, the XML messaging that Raphael was mentioning before. The project is called Target 2 T2S Consolidation and was expected to let's say migrate to complete its migration by November 2021 with a big bang. Nowadays, we know that it's probably postponed 1 year, and this will be let's say official by ECB decision very soon, because as a reaction of the COVID-19 crisis, the main representatives of the banking industry in Europe request this postponement to focus on current issues of, let's say, the business as usual. As a consequence of the postponement, we will see a new milestone plan by September, October to understand how to implement the next steps for the system, for the migration.
Is this consolidation a similar scale as the old legacy changes of yesteryear, Mario?
It is worth to mention that according to the ECB, banks not able to migrate would risk their end of business. That's why the entire community is preparing for 2 or now 3 years project that include at least 9 months of community testing. So yes, Ali, this impact of the migration is seen as challenging as SEPA migration or T2S migration in the recent past. Probably the deadline postponement will help banks in review and reassess some of their choices. For example, they are still deciding how to connect to the service, what part of their architecture they want to adapt to ISO 20022, how they want to align with the cross-border payment processing, which will migrate to Swift ISO 20022, like was saying Raphael before, in the same time, how they can digitalize their liquidity management process, or what they have to evolve for payment data governance and usage of analytics.
What are some of these other opportunities? Obviously, you mentioned that element of transparency. What are some of the, I suppose, the ones that you weren't expecting to come out?
Well, I mean, we are a fairly big group, a very successful pan-European bank with, I would say, with a fairly large amount of customer base, both in retail and in corporate. That means we have quite a lot of systems and infrastructural deriving from our different legacies from the historical part of the bank that is coming from different type of mergers and acquisitions in the last decades. As an offset, if you look at the transition period to transform, and you're looking only at the transformation of the current asset, versus you are looking to replace some of the assets, for example, or to streamline some of them. This on the, let's say, on the pure technical asset point of view. Then there is the processes point of view. So say, okay, I mean, what can I do better using this new infrastructural side? And we already have identified some of the things that from deriving from the technical changes that internally we can streamline. And for us, it's fundamentally, we will have I would say, better service for the same, I would say, end result in terms of cost and also in terms of efficiency. Then comes the value-added services that now you can start to think about that you can bring using this technology. Because as an XML based on infrastructure, when you do the changes all the way through, you are able to create really value-added new solutions, whether real-time or very close to real-time, which in the past you had to look at this from a different way, that you need to convert a lot of formats from one place to the other. And this will always deprive you in terms of cost and in terms of how efficient you are in order to get to the end result. So I would say we would see quite a lot of improvement in the service level and also in the new solutions that we are going to provide to our clients. So it's exciting times. But then when you're in the middle of this project, which is quite, I would say, big and acute, it's very tough. But to see the end of this project and what you can generate after that, it creates also a lot of energy for the team.
Absolutely. And I always find that these kind of projects have a very large impact, not just in terms of the product, but in terms of, it's very hard to quantify, but in terms of the culture, in terms of the team, in terms of we are going to get this done and be the best that we can be in it.
Being a project which is by nature not an internal project, but a regulatory project that goes into a big bang approach, so there is no fallback option. This already derives you into an end date that it has to work. So when you have this type of a project, which you cannot granulate or accumulate a different type of functionalities or different type of dates, it requires a different type of thinking and preparation. Because there's no other option, so failure is not an option. You have to be ready on time, and all the bank have to be ready on time.
I believe you said last time that we met that if it works 99.99% of the time, that's not good enough.
In target 2, you're absolutely right. This is not enough.
What are some of the implications of ISO 20022? Mario.
ISO 20022 is a cornerstone for today payments modernization and a global trend which has been embraced by payment infrastructure worldwide, such as Fedwire and Bank of England for the next future, but for the recent past by China, Japan and Switzerland infrastructure. The importance of this new standard is linked to the capability to manage new data components and richer information, which in turn increase transparency of payment processing, helps compliance, and provides better customer service, more rich in contents. Being an open standard, ISO 20022 provide an ecosystem with a variety of tools and supports, but requires design capabilities and significant investments to be implemented, since it impacts many systems, all the business system, internal system, databases, settlement and clearing system, correspondent banking system, so the impact is very wide. Migration imply the strategic decision on where and how to intervene in the existing infrastructure of a bank with changes. And you know that the deeper is the impact of changes, the bigger will be the investment, and the lower probably is the operating cost, expected operating cost. So it's a strategic decision how to manage this ISO 20022 and how deep to manage the impact of those new messages into the existing architecture. From a business perspective, like Raphael was saying before, if you have to invest then a significant amount of money for a mandatory project, you have the opportunity to exploit this mandatory budget to change your bank or your process and introduce more digital transformation into your bank processing, the bank payment processing.
With that in mind, what is the European Central Bank's part in all this? Mario, what's your take on this?
The European Central Bank is at the same time sponsor of the change because it's investing since 2009 to release this new infrastructure. Is manager of the services because it operates the platform together with 4CB, with Bank of Italy, Bundesbank, Banque de France and Banco de España. And is also the regulatory supervising authority that together with the National Central Bank supervises the bank project implementation. We have been working for them for T2S implementation for a while, and I can say they have the capability to play all these roles actually.
Well, last question I kind of want to touch on is let's take a step outside of UniCredit for a moment. What does this migration and the whole of Target 2, what does that mean for the future of the whole payments ecosystem within Europe?
I would say, as we call it here in UniCredit, is the overall XML journey, no? The journey towards XML ISO 222 is a pillar. It will be a pillar, I would say, in our ability in the future to develop real-time or close to real-time added value service in the world of payments. It's as simple and as complex as that. Because at the end of the day, with the open banking and with this infrastructure, it would be a lot more easy to provide new services and new solutions to our clients. Then, of course, I mean, it also will reduce, in a way, quite a lot if I look today, the ability that we have to do all these conversions from one format to the other format, wherever we do the routing and the clearing from one country to the other country, it would eventually, and I say eventually, streamline that as well. I say eventually because it's a journey. I mean, even if someone tell you it's an easy things to do, you can give me his number or her number, because I would like to understand that. It's a difficult journey, cultural journey, that we have to go through. So, punto.
Excellent. And Mario, what about yourself? Where do you see this migration? What does it mean for the payments ecosystem for the future?
This migration means a wider and more integrated European payment ecosystem, more solid because has a better funding and liquidity management capability, supported by secure and reliable central banking services in real time and for extended hours. This means also more competitive European payments and banking industry and stronger euro currency, and will in the future attract more counterparties from abroad because of its stability and cost efficiency. We have been working in this space for 20 years and supported different migration. Today we are helping more than 40 banks for a successful T2S consolidation project, and we will support them in seizing the opportunities deriving from the postponement with the service we are able to provide, like cloud for connectivity, liquidity digitalization, liquidity management and digitalization, and improvement of payment processing within the ISO 20022 framework.
Well, thank you very much, guys, for taking the time to speak with us today. Raphael, where can we find out more about yourself? What's the best way to reach out?
In which sense? Sorry, I didn't get the last question.
What's the best way to reach out to you? Are you on LinkedIn, TikTok?
Yes, I am LinkedIn. TikTok, no. After what you have see happening in TikTok, no. LinkedIn, I think you have my profile there. I think, of course, also if you need any more information coming also from the bank, it's not an easy problem to provide.
Excellent. And yourself, Mario, what's the best way to reach out to yourself? Are you on TikTok?
Not on TikTok yet, but you can find me on LinkedIn, Mario Mendia, or on my company website, tasgroup.eu.
Brilliant. Perfect. Thank you very much, guys.